Hello, I'm David Frazier, the President and Chief Market Strategist of Frazier Mayer Research, LLC, which produces our Frazier's Strategic Allocator Individual Investor Service. We're recording this week's Internet TV show on Tuesday, January 10th at around 2:20 in the afternoon. So, I want to start off this week by saying that we're going to use a little bit of a different format in topics that we cover and the detail or lack thereof of which we cover topics on our weekly show. And the reason being is really quite simple. This show is supposed to be enjoyable for you to watch and listen to. It's supposed to provide you with information regarding worldwide economic developments, worldwide geopolitical factors and developments when they're important, significant ones that is, that in my experience suggests will likely have an impact on the financial markets, as well as coverage of our recommended portfolio holdings, but in a general way, not in a tedious, detailed way, because you already get that, I think, in our written publications. And it's also was meant to be a service, a show that will comment on what others, so-called experts, as well as actual experts, are thinking and saying regarding factors and developments in the financial markets. But it's supposed to be enjoyable for you to watch and listen to. And I'll tell you what, I went back and watched and listened to the past two videos that I recorded, and boy, were they boring. They were more than boring. They were painful to get through. They were so tedious, and I'm thinking, oh my God, I don't even want to watch this, and I'm the one who recorded it, or at least the person that presented the video. So, I thought about that. I said, wow, this has got to change. No one's going to want to watch and listen to this. And even though I think and hope that I provide some information, it's got to be easy for you to watch and listen to, or you're not going to want to bother. So, I'm not going to get into a lot of details beginning today and going forward in anything that I discuss, because I think I probably provide a lot of detail in our weekly market commentaries and our monthly investment journals. I hope and think that you would agree with that. I cover a lot of information in those monthly journals, and I cover what I think is important also in our weekly written commentaries. And I discuss, at least to some degree, my recommended securities holdings in those publications, as well as at least in a brief way, sometimes in a detailed way, in our trade alerts that we issue. So there's no reason to go back over all this stuff that I already talk about, or already discussed, I should say, not talk about, in those written publications. Let's keep it simple and general in nature. And in just a moment, so I'll get into this week's topics and discuss those. Secondly, if I fumble on my words on occasion, it's because I don't use a teleprompter. I don't use a script. I'm not trying to get everything perfect in the way that I say it. I just want to be forthright. I want to tell you what I'm thinking and analyzing and seeing in the markets. And most importantly, in this show and in our publications, what I and we as a firm strive to do very, very sincerely and very seriously is to provide you with everything that you need to know, but nothing more, regarding factors and developments that are likely to affect the worldwide financial markets and your personal investment portfolios. So, having said that, before going forward, I want to say one other thing real quickly, and that is to try to ensure that I do discuss factors and developments that are important, but in addition to that, to strive to also cover factors and developments that you, our clients and subscribers, are interested in. I encourage you very strongly, beginning today, if there's any topic regarding the financial markets and regarding investment securities that you would like for me to discuss, just send us an email, and we'll at least put forth every effort to provide you with a discussion and information on those topics. So where would you send this email? Send it to, send us an email regarding any topics that you would like for us to discuss to marketwrap@investorsmonitor.com. That's market, of course, M-A-R-K-E-T, wrap, just R-A-P, market, R-A-P, market wrap, at investorsmonitor.com. And I'll try to cover those topics. Okay, having said that, let me pull out my notes here. And so, what do I want to talk about today? Well, I'm looking at my notes and I see, well, economic factors and developments. Well, as I just mentioned, I don't think I really need to get into that. And the reason being, I think I cover these factors and developments thoroughly in our publication. So I'm not going to get into any details on that, other than to mention an economic and financial market indicator that was issued today on Tuesday, January 10th, by the National Federation of Independent Business. One of the many leading indicators that I follow that's produced by that organization is called the Small Business Optimism Index. And that index during December, it rose to the highest level since the end of 2004, and it rose at the fastest pace since, I don't have the exact day, week, or month, but at the fastest pace since 1980. 1980. This index, which is based on surveys of small business owners, hundreds of small business owners in the United States, whereby the National Federation of Independent Business, every month, they call these small business owners and they ask them various questions regarding their expectations for the direction of the economy, their expectations for their capital investments, whether or not the small business owners are going to increase their investments in their manufacturing facilities, or in their retail stores, if they operate retail stores, or whether or not they expect to hire more people or lay off people. They go through and ask them a lot of questions to try to gauge what the plans and expectations of these small business owners are every month. And that's very important. The reason being, I think a lot of you, not all of you, are well of the fact that the vast majority of new jobs created here in the United States during any given month is created by small businesses, not these massive international businesses, but by small businesses. And small businesses in the United States in general tend to drive overall economic activity. And it's very important, therefore, what these small business owners are actually doing, what they're planning to do, and what their economic and business expectations are. So the fact that so the National Federation of Independent Business calls hundreds of small business owners every month. They ask them various questions that I just mentioned, and then they take that information and they use that information to compose an index of the overall, on average, plans and expectations of these small business owners. So the fact that index rose at the fastest pace during December since the year 1980, that's telling you and us, me, that there's a lot of optimism from these small business owners. And that's very important, because if they're very optimistic, they're probably going to increase their investments in their business operations. They're probably going to hire more people. and that's going to probably lead to faster economic growth. So this is a very, very, very positive development. I'm just going to read something here. I haven't even read this myself yet. I'm at the National Federation of Independent Business website at the moment, and I'm reading, it states, the share of business owners who say now is a good time to expand is 3 times the average of the current economic expansion. 3 times the average. It goes on to say, more companies also said they plan to increase investment and to keep hiring, which, according to the National Federation of Independent Business, according to them, quote, which reflects optimism surrounding President-elect Donald Trump's plans of spurring the economy through deregulation, tax reform, and infrastructure spending. Well, those of you that watched the special video that I did back during October with Weiss Research, hopefully you recall, those are some of the topics, some of the major topics that I discussed regarding, in the event that Donald Trump were elected, that I would expect tax reform, positive tax reform, meaning cuts in tax rates, which has always been very, very positive for the U.S. economy, and always has increased tax revenues as opposed to lowering them, which is in direct contrast with what certain politicians claim, what they lie about. Let's just put it like it is. And deregulation, infrastructure spending. These are topics that I discussed back in October. And I really did just now go to this website. I didn't even know that that's what they had there. Okay, that's enough about that. So I don't have anything else to talk about regarding economic factors and developments, because, as I said, I discussed those factors and developments in our monthly journals and in our weekly commentaries, weekly written commentaries. So now, let me move on and take a look, very brief look at our recommended portfolio holdings. And I'm not going to get into detail here either, because I do that in a written publication. So I have a computer screen in front of me. I'm just going to pull up our different portfolios and see if there's anything that maybe I should make you aware of that I haven't written about yet. So I'm pulling up our model income portfolio, and I'm seeing today, on Tuesday, January 10th, we have a little bit of a pullback in AMJ, that's the JP Morgan Alerian MLP index. So I'm sure we also see that in the UBS eTrax Alerian MLP infrastructure ETN, and we do a little bit of a pullback, and that's not surprising. And why? Because I know this is already the case. I'm just going to type it in so I can confirm it. But sure enough, crude oil prices pulled back a bit over the past, well, today and over the previous 2 days. But I'm not worried about that, and I don't really ever worry about anything. If I'm worried about something, I don't sit around and have a bunch of emotions. If I'm worried about a portfolio holding, I go do research, and if it looks like we're seeing some negative developments, then I'll simply sell my holdings and recommend for our clients and subscribers to sell something that I've recommended for them to purchase if it looks like we've had some negative developments. But I'll say I'm not worried about the modest pullback in oil prices, because, as I've already discussed in our publications, my research indicates strongly that we're going to see the supply of petroleum products around the globe continue to remain probably above the worldwide demand for those products over the next few months. But my research indicates that the demand is going to increase relative to supply, and it's a good chance that within approximately 3 months from now, based on my research, that the demand is going to rise above supply. So if that's the case, and that's a simple economics, supply versus demand, demand versus quantity supply, if that does occur, then we're going to see the price of oil move higher, which will be, of course, positive. A positive factor or positive development would be for my recommended holdings in AMJ and MLPI. Let's go glance real quickly. Our REIT holding, also moved back a little bit today. Not concerned about that. Our healthcare REIT recommendation has trended higher over the past 3 months, past 2 months, I'm sorry, but did pull back a bit today. Okay, enough about that. Don't need to get into any details. Let me take a quick look at our growth and income portfolio recommended holdings and see if there's anything maybe I should mention there. And yeah, there is something that I'm going to mention. I see that Cliffs Natural Resources, which had pulled back over the past, I got to look at something else to find it, if you'll give me a moment. Just pulling up my list. Well, it's taking too long for me, maybe not for you, but it is for me. So one moment, please. Well, daily well, let's see. Well, that Cliffs Natural Resources really, its recent peak is in early December, and it's pulled back since then. But it's held above a major price support level. The trading volume was relatively light, got lighter and lighter and lighter on the pullback, and then we had a rebound in it today. So there's a good chance that I might issue a trade alert to add to that position later today on Tuesday, January the 10th. The same is the case with Granite Construction, which I've been monitoring very closely. I monitor all of our holdings, recommended holdings, very closely. And it's also pulled back over the past month on lighter and lighter traded volume, but then rebounded just a bit today. So I might ask you to add to that. And thirdly, I'm also, it looks like Vulcan Materials has done just the same. Pulled back. One moment, please. Vulcan Materials peaked right after the election, and after it jumped big on the day after of the election, but then it's trended lower since then, and has held above a major price support level, and price momentum indicators suggest that it's substantially oversold on a short-term basis. So I also might issue a press release, a trade alert today, to advise those of you that follow a growth and income portfolio to add to that position. Okay, and one more portfolio, of course, our speculative portfolio. I think we might be already fully invested in that portfolio, so there's nothing we can add to unless I tell you to sell something, and I don't want to tell you to sell anything. I think we're well positioned in that portfolio. I just now overlooked something we actually did. I asked you yesterday in a trade alert that I issued on Monday of this week, January the 9th, to sell the ETF's physical palladium shares, ETF, symbols PALL, because it's moved so sharply, so quickly. You know, those of you that followed my buy recommendation on that should have been able to realize almost right around a 15% return. And my gosh, I don't know. I know it's been less than 20 days. I don't know exactly the number of days. I think it's only been 11 or 12 days since I recommended it. It might have been less than that. I don't recall. So we do have a little bit of money, if you followed my recommendations, to add to a purchase amount of securities for those of you that are speculative investors, speculative traders. I don't know. Probably not going to issue a new trade alert on anything for that portfolio, because I want to monitor PALL very closely. That is the Palladium shares ETF, as well as futures contracts on Palladium, and look for look for a time to get us back into that ETF. Because even though I think it's not going to continue, it hasn't done anything yet. It looks like it's peaking. Although I expect it to pull back over the next few days, possibly the next couple of weeks. I expect it to continue to move higher throughout 2017 after a pullback. So I want to get you back in it. There is one other stock I want to mention briefly that I've recommended for persons who follow our speculative portfolio, and that's Stanley Furniture. this is this stock right now. It's trading at less than $1, 94 cents a share. I think when I recommended it for purchase, I think it was at $1 a share. Might have been a little higher than $1. I don't recall exactly. I'm sure you know if you bought it. I almost never, I mean, it's extremely rarely that I personally purchase or recommend for others to purchase a stock that's trading for less than $5 a share. And the reason being is this, and probably a lot of you are already well aware of this, stocks that trade for less than $5 a share are referred to in general terms as penny stocks. And without getting into why they're referred to that, who cares? What's important about penny stocks, stocks that trade for less than $5 a share, is institutional investors generally don't put any money in those stocks. They don't write any research reports on those stocks. They don't, therefore, support those stocks, support the prices of those stocks with their own by trading in those stocks or advising others to buy those stocks. And therefore, only individuals tend to trade in those stocks. And individuals tend to, I think, in my opinion, my experience, tend to be, in general, tend to be more emotional than institutional investors, and therefore you tend to get a lot of volatility in these type of stocks. So that's the biggest reason that I very rarely recommend penny stocks. Secondly, I don't know the exact percentage, but a very, very large, how do I say this? Generally speaking, penny stocks are penny stocks for a very good reason. And that is, generally speaking, stocks that trade for less than $5 a share, especially if they trade for around only $1 a share, usually they're companies that aren't going to make it. You know, they're in bad shape financially. They have low or deteriorating revenues and earnings, and they're going to go bankrupt. But I have thoroughly researched Stanley Furniture, and just the opposite is true. That is with their financial condition. Their revenues and earnings did decline over the past few years. That doesn't surprise me because of the sluggish economic growth that we've had around the world. And any, therefore, maker of furniture was going to go through some rough times during that period. And that's what we've seen in general, as furniture makers did go through rough times. And especially makers, well, I shouldn't say especially, but for the most part, companies that manufacture furniture here in the United States. And the reason being is because it costs a lot more money to manufacture furniture in the United States than it does in certain other regions of the world, and specifically than it does to manufacture furniture in China and in certain other countries.
Stanley Furniture, it's been about a year ago now, they decided to shut down the vast majority of their U.S. manufacturing plants, and they decided to begin manufacturing furniture in Vietnam. I've written about and discussed Vietnam in the past. I don't know if you've read any of my publications on Vietnam, but Vietnam is a country where manufacturing costs are even lower even than China. Very, very low manufacturing costs. So, well, Stanley Furniture has experienced some headaches and some problems with getting that plant up and running to its specifications. And that's not a surprise. You know, there's been delays and there's been problems with meeting Stanley Furniture's requirements in quality. But in my opinion and my research, and this isn't just guesswork, I read a lot of documents and do a lot of research before I recommend any security. So in my opinion, based on that research, I think the bad times are over for Stanley. And if the economy improves in the way that I expect it to improve over the next 12 to 18 months, well, people are going to go out and they're probably going to spend more money in the aggregate on furniture. And I think the furniture industry in general is going to do well here over the next 12 to 18 months. And therefore, we might see I think there's a very good chance we're going to see a dramatic turnaround
in Stanley Furniture's financial operating results. And in fact, I think there's a good chance, I'm not saying this is going to happen, but I think there's a good chance that this stock could be a 10-bagger and possible. Of course, anything's possible here, people, so let me not say that. I think it's a good possibility this is going to be a 10-bagger, meaning it's going to appreciate by tenfold in price over the next 2 to 3 years, and a decent probability that it's going to appreciate in price by 20-fold. So, don't be foolish. If you haven't yet bought this stock, don't all of a sudden put a lot of your money in it. We never want to put a lot of our money in any stock, and especially in penny stocks, because there's always risk involved. Some of the risk I've just mentioned. But I encourage those of you that like to speculate with a small portion of your money on stocks that look as if they have an opportunity to return some huge returns. I suggest you consider putting your money in that stock. This is not for the faint of heart. This is not, you need to be a bit of a risk taker here. But okay, enough about that. So I'm not going to say, well, I did want to say, I was going to say one other thing, but this has been long enough. Hopefully it hasn't been boring like my other recent videos, but it's been long enough, and I don't see a need to discuss anything else. So let me get back to my screen here. So I thank you for watching and listening. Hope you got something out of this. And as I said, if there's some topic that you want us to cover, send us an email. Or if you would like me to change some things and how I present myself and what we cover and what we do or do not cover, send us an email. You're not going to make me upset. You're not going to, I really want to help you, our clients and subscribers, regarding your financial market speculations and investments. I truly want to be a benefit to you. So I thank you for watching and listening, and I'll speak with you again next week.